All right. I'm going to make a couple announcements. Make sure everybody knows we're live. All right. Welcome to this Fibonacci workshop. This is the evil rejection level workshop. What I'm going to discuss today is a key Fibonacci level that we have seen cause plenty of rejections this season in all markets. We've seen it happen on the DXY, which I'm going to demonstrate, which is the dollar index. Thank you, Christopher. Thanks for tuning in. And we've seen it happen on the S&P where we call the local top. I've seen it happen on Bitcoin to the upside and to the downside. We've seen it on Ether. This is going to be a chop zone rejection level where we're going to see trades sort of chop out, find a local top, maybe reject and turn around. And the reason I want to highlight this fib level because a lot of times you can be in this breakout trade and you think that, hey, my chart's breaking out, but it never hits your 1.618 fib, right? And you're like, well, where am I going to profit take? When am I going to trim my stop? Why is this fib? Why is my trade rejecting before it does? And here, it can be pretty tricky once we establish these ranges or yeah, like pretty much a range or formation that's forming. It can be tricky to figure out where this fib level is going to be. So I'm going to go ahead and start from scratch. I'm going to remove everything, remove all drawing tools. And we're going to start with Ether as an example. With the current formation, you can actually go back to this zone, right? And this fib level is actually not going to be turned on your standard chart. So when you get on TradingView and you draw your fibs, it's not going to be present. It's not going to be there. So what I need you to do is you want to click on your fib, go into your gearbox, which is up here. Or you can kind of drag this. I have mine set out of the way and in the corner. So you're going to get this little nifty editing tool. And what you do, you can go into settings. I want you to turn on your 1.272. It's going to be turned off. So you're just going to click turn on. And I want you to change its color, right? Because that's what you're going to look for. And on mine, my standard fibs are yellow. This one's light blue or turquoise, just to give me that clear visual of, hey, this is going to be our rejection zone. And drawing this, you want to pick a good impulse or a good range. And if we were to pick this last impulse from this, I'm going to go ahead and delete it for now. If you're going to pick this last impulse, we had a swing high and we had a swing low. I'm just going to go ahead and draw them on here. This is our swing high. This is our swing low, and now we see movement to the upside. So where is this potentially to find a top? Where is this potentially going to reject off this move, right? So we had a move that turned around. You're going to go ahead and pick our swing high, drag down to our swing low, right? We can use wicks on here because we're doing an intraday. This is a 15-minute chart, and bam, here it is, right? So if one was to long here based on what they're seeing, whether it was like the skewed inverse head and shoulders or even long here on this flag, fibbing this impulse move, right? This impulse move down to get upwards extension gives us exactly where this trade turned around, right? Which if we didn't have that 1.272 fib drawn, if this wasn't even visible, right, it would be in no man's land. Right, there's no way to pick a local top here based on this move except for, oh, I'm going to sell the last resistance. So this is one example of this. If you guys have further questions or questions on this example, please feel free to drop them in the comment box. All right, so I'm going to go ahead and turn this fib back on because it is my current standard. And this is going to be helpful on pretty much any time frame, every time frame. I haven't checked the swing low with this move, but anytime we see a swing that's contradicting the previous move, if you go from swing low to swing high, if you were to get a downwards extension, there's that fib level. It strikes again, right? Where did we get the rejection? That's why I call this the Fibonacci rejection zone, right? I'm sure you guys can clearly see what happened here on this wick. It literally rejected right at that 1.2 level, right? So, I mean, is this a level that we just want to place bids and sells based on? Not quite, but if you want to figure out, try to see where we're going to spot a turn. If not turn the first time, the second or third time, then we're able to do that. So if I was to drag my fib out further, this 1.272 extension level, it held up. It held up not just once, but 3 times. I'm going to get rid of this secondary. It up a second and a third time, and now we're seeing an attempt at a continuation, right? At an upwards rally continuation. A lot of times this comes in handy when we're drawing like big long-term bull flags. If I was to pull up the SPY, the S&P 500, we're just going to do like the ES1, show you that this happens across all markets, which is going to be futures of the S&P. And we're going to go to the daily chart. Now I'm just going to remove everything, remove all drawing. Big extended bull flag here. And this isn't in the last publication we published on Medium, right? So if you guys look at the Medium article, I had this as the next local top, that 1.272 level. And let's say we were in this trade, we saw this bull flag shaping. It doesn't look like a flag on the hourly. It's going to look like a flag on the daily or 720 or so. It's going to wait this thing to load out. Right, so we're seeing somewhat of a skewed bull flag here, and I'm just gonna go wick to wick on the 1.272. I like doing that. I was asked about that in our server the other day, and what do we see here? Right, if somebody sees this bull flag, says, "Hey, I'm gonna buy this bull flag, and I'm gonna profit take the 1.618, which is my first fib level." Well, if you don't have the 1.272 drawn, what just happened? If you don't have the 1.272 drawn, right, your breakout's likely going to get rejected. And you're going to long here and you say, this is my target, and it goes up and it fails. You're like, why did my breakout fail? Like, what happened? Why am I not hitting my targets? And there's also the 1.4, which hasn't been very, I don't really like using it a whole lot. And it gave us that second zone, right? And now we're just going to see this chop, and now it's above the 1.414, so we could likely hit that 1.618. But one thing we did here, and we shorted this, and it was a profitable short. I announced some puts for 2 weeks out, and I said profit take them pretty much like the next day, because we sold here with a put down. There was a gap on the SPY like 290, and we profit took that, and now we're seeing continued rally to the upside. But this 1.272 is going to give us some pretty good swing trades. It's going to give us topside targets. Also going to give us rejection zones. We just saw it reject on ETH. I'm going to pull up another example, which is going to be the DXY, the dollar index. And if you guys are like, hey, why are you following all these markets? Because they're very much correlated, right? A lot of these markets have, they correlate. They pretty much trade very similarly, and they have inverse and direct correlations. Based on this DXY, right, it was coming down, and all of a sudden it turned around, a double bottom, then it shot up. What this did is it caused a dump in silver, a dump in gold, a dump in indices, pretty much a dump all over the place. And yeah, so this is a dollar index. What happens is when the dollar index goes up, a lot of other currencies, they kind of flock back to the dollar, right? Because it is getting stronger, so there's no need for precious metals. Stocks go down, everything goes down, so it's a hedge. And once again, if somebody was shorting this, let's say somebody shorted here and they shorted here, and it came down and they see this rejection, and if this was a no man's land, if you don't have the 1.272 here or the 1.4, then what happened? Why did this bearish impulse move reject, right? And if that 1.272 is not drawn on your charts, you're going to be caught with your pants down more often than not, especially right now. This thing's been so prevalent, visible in all markets, on all charts. Here we kind of see RSI come down and do this coil and then turn around. So trading just based off the 1.272 isn't going to be enough, but pairing it with another indicator, with a divergence, with candlestick formations, with maybe a double bottom, that's gonna give us a cue or a clue that, hey, this is an entry signal, this is an exit signal, and so forth. You guys have questions on this? YouTube, anybody have any questions on what I just went over? BT. So we're gonna go maybe the 120, the 2, maybe the 60. I had highlighted this bearish flag. There's actually a few of them, right? So this was kind of one right here. Right, and a chart broke down. Then what I decided to do is somewhat of a rising wedge. We're probably going to see another 1.272 rejection right here. So when markets are choppy, this is going to be the golden key. It's like the 50% or 61.8 retracement almost. So what happened here? We got this rising wedge, post bear flag, but it wasn't too intense of a bear flag, right? Supposed to highlight this just based on the candles, right? The smaller flag, and we saw that push down. Well, if we were to go to that last swing high, or here, you start here at this wick, and we go to that last swing high. Maybe I did this one off candles. So we pick a swing high, come down to a swing low. We see that 1.272 rejection here, and it kind of held, right? So if you're trading intraday and you had a short going, if you had a short going from up here, right, and we saw this consolidation, we saw this flag. Even if somebody shorted this flag over here, saying, hey, it's a bear flag, I'm gonna short it. Well, guess what? It turned around and it did it pretty quick at the 1.272. Even if one shorted here, I was actually debating shorting here or the retest. I just didn't want to do it just yet. I don't feel comfortable shorting Bitcoin just now. I'd rather be hunting down long entries, right? Based on that, I mean, it wasn't quite much of a fib here to close that short, but I do think this is a 1.272 of this bull flag. So if I'm going to go to 30 and chart this intraday bull flag that we see in Breakout, swing. There's room for further rejection based on wicks, right? It didn't quite reach that 1.272 if you're going off these wicks. If you go off the candles, I'm pretty positive it did, and it rejected right there, right? So going off wicks, going off candles, that's going to be up to you, based on your preference and based on how, soon you want to call a rejection, how soon you want to profit take, and what you're more comfortable with, whether it's going to be wicks or candles. Typically, I like using candles because they're more reliable. Wicks are price actions in the extremes, right? So like extreme market participants. But I mean, an asset as volatile as BTC, I prefer candles. On Ether, we're seeing less volatility. I'm gonna go with wicks. Even alts are rejecting at these levels, and I'm gonna go ahead and give a little bit of an example. And sometimes it's worth waiting out that first 1.272 rejection, the second 1.272 rejection, maybe a retrace off that 1.0. And I'm just gonna remove all drawing tools. What sucks is I had a signal on Walton chain down here, right? And we got stopped out. And I was saying as BTC dominance was going up, hey, some of these coins are going to catapult just based on how much momentum they had. And sure enough, we saw this. I should have, actually, no, I think I did re-signal this a second time and for this pop up here. And that's where we got stopped out on the bot. But based on this consolidation, right? Based on this consolidation that we're seeing, and it's doing somewhat of a triangle that sold off and rejected and then kind of went back up. So based on this consolidation, if we're to go swing high to swing low, where did we reject, right? Somebody in this trade that, let's say we bought this breakout and it hits a 1.272 and it comes back down. You're like, damn it, this is a failed breakout. I'm quitting. Don't want to trade anymore. This sucks. You buy here, you end up selling at break even. Well, guess what? That was just the first time it rejected, right? Second time it hit that 1.0, came back down, and that's when the rally started. Just like what we saw on the SPY, right? And here we see another cup and handle for an extended breakout. So this fib level, it's the evil rejection zone. That's why I'm calling it that, because it's gonna make our breakouts look like they're rally. Same thing with the S&P. I'm gonna go back to that ES1 chart where let's go to the 60. Pretty much the same thing happened where we saw a rejection of the 1.2, pull back to the 1.0, right, to the 0 or to the 1 for an extended rally for the upwards extension to finish out that move. All right, fam bam, hit me with something. Give me something good. Give me a chart to look at so I can give you guys some more examples, see if we can hunt down more of these 1.2s. Another 1.272 that we saw was in this wedge. If you guys remember, we were short down here. Right, this works on pretty much any time frame, any move. I remember being short down here on the S&P or ES, and this is where we started closing shorts and flipping long. I'm pretty sure we had a 1.2. Where are you? Right, so we got that impulse. This is where we had a gap down, and there's that 1.2 just holding steady, holding steady, holding steady for another turn. You guys see that? Now, if you were to flip this upside down, right, this looks like a bear pennant, a reverse bear pennant. And why did I pick that this swing high over here? And in hindsight, right, it's really easy to draw this, especially on like bigger impulse moves. Test, right, on a retest, it's okay to long. It's okay to look at traditional markets too, right? I mean, this is how markets move. Whether it's forex or stock market. I've been asked, hey, like, how does crypto translate to the stock market? Well, it's pretty much the same thing. Justin, I see you type in is saying message retracted. Can you? I'm not sure what your question is there. Do you guys have any questions before I wrap this up? It's kind of was a shorter workshop, shorter fib workshop. Just make sure whenever you get on, whether you're on TradingView, Coinigy, whatever charting platform you're on, to turn this fib level on, right? I'm gonna get rid of that 1.4. Turn on that 1.272 and change its color, whether you want it red or blue. Make sure it just kind of sticks out and it alerts you that, hey, this is where we're likely to see a rejection or a continuation. Going back to Bitcoin, the other examples I showed you, right? We could reject back down and failed breakout. We can turn back around. I don't think this is a 1.2 off this big move up. I haven't fibbed that, and it's definitely not, right? So the 1.2 of this is going to be a lot further down at 9,200 mark, right? So if this impulse down move was to continue and we were to see more of an extension, where do we want to place our longs, right? If this is where I anticipate it to be, right at that 1.272 for a long, right? If this thing was just going to zigzag back down to where it started. So if this fails, there's a big short opportunity with a target down here, right? If somebody wanted to say, hey, like, no, we're gonna retest this trend line, right? I wouldn't long until we pretty much break this trend line. On maybe another retest, I'm likely gonna want a short or get excited for a short for a test that 1.272, right? And this is how you're gonna catch some of these rejection zones, some of these rejections where nobody's profit taking, but the chart is turning. All right, thank you for that. I'm gonna have a sip of coffee real quick. This looks bullish, right? This looks bullish. It looks like it wants to break out already. A little micro bear flag on here. Where would my rejection zone be if this is what you're asking? Based on this impulse move, we're gonna go up to close to last high, right? That's gonna be our first rejection zone. How big of a move is this in terms of USD? 24 or so % up, right? And if we reject here, we're probably gonna come back down, and guess what? We're gonna retest. We're gonna come back down for a retest, right? So if this thing does go up, it's likely to come back down and retest. And what are we retesting? That previous resistance, right? Make sure it turns into support before a continuation of the rally. If this was to sustain and do a big up move. Well, fam, thank you for tuning into this workshop. I hope I was able to answer your questions or at least shed some light on the 1.272 rejection zone. Drop me a comment on the video if you liked it. Smash that like button. Share it with a friend. And I'll hang tight, see if anybody else has more questions about the 1.2. Typically, if we're looking to extend an up move, right? If we're looking to draw this, right? So here we see a big down move, right? So if you start with a swing high and come down to your swing low, you're gonna get your upwards targets. All right, so make sure you draw your fib properly. So you're gonna get that. If this range starts to, right, if you get this close up here, this thing goes up and finds support over here above the 1.272. The next 1.272 is gonna be up here, right? Now the inverse is true. So if I wanted to get the downwards 1.272 extension, all you'd have to do is flip that fib around. Right, and based on that, if this range fails, You're gonna want to see a hidden support at that 1.272 for rejection. Smash that like button, share this video, and I'll catch you guys on Discord.